Hi, this is Stefan, and welcome to the Tax Strategy Training. If you have clients that are facing 6 to 8 figure capital gains and you're looking for ways to help them mitigate those capital gains taxes beyond the typical traditional things like 1031 exchanges, well, if that's you, you're definitely in the right place. Now, I'm going to be going over a ton of important information over the next 30 minutes or so, really from a high level. I'm not going to get too technical because each of your clients is going to have a unique set of circumstances and situation. And I really don't want to bore you with all the nuances when it comes to these, structures and strategies. So I'm pretty sure that you're going to have a lot of questions. So just be sure to stick around until the end of the training and I'll show you exactly how you can get any questions that you have answered and how our team can help you and your clients. So this training is all about how you as a real estate professional or business broker, accountant, or other advisor can become more valuable, close more deals, and get more referrals by partnering with specialists to help your clients significantly reduce capital gains taxes. Now, if you're a real estate or business broker, you're probably fully aware that in most states, it's illegal for you to give tax advice. But the subject of taxes is bound to come up at some point before closing, right? And if you're a realtor, one of the core fiduciary duties is what? Accounting, right? So it's your job to look out for your client's best interest. And for most of your clients, their best interest is to keep more of their money. But usually the first thing that clients want to kind of negotiate and bring down is, your fees or your commissions or whatever you charge or how you're getting paid. But capital gains taxes are usually the biggest cost to your clients when they're selling their assets. So if you can help them reduce capital gains taxes, you build more value, you can more than justify the cost of your services and what you're providing, and you become a superhero to your clients. You get to differentiate yourself from the competition, negotiate better, and get more referrals by showing clients how they can keep more of their money. Now, one of the most successful businessmen of our time, Elon Musk, said, "You get paid in direct proportion to the difficulty of the problems you solve." And capital gains taxes are a very difficult and big problem for your clients. When clients don't move forward with a transaction because of capital gains taxes, it sucks for not only your clients, but it sucks for you, right? It sucks for the title company, the attorney, the list goes on and on. No one's getting paid. So just think about all the doors that will open for you if you're the one that's able to bring deals to the closing table and negotiate better because taxes are no longer an issue. So whether it's commercial property or you have clients that are selling luxury homes or businesses, we're going to show you how to help your clients avoid the pain of stroking that huge check and paying that huge capital gains tax bill so that you can close more deals. That's what this is all about. Now, this has nothing to do with 1031 exchanges, installment sales, opportunity zone funds, or really any strategy where you're just deferring the taxes for a few years. Those are obviously all viable options for some of your clients. You're probably familiar with those, but that's not going to be the topic of this training. So make sure you grab a pad and pen, take notes on your cell phone or tablet, and pay very close attention because I'm going to be going over specialized tax structures that have been in the Internal Revenue Code for decades that the ultra wealthy use all the time and can greatly reduce capital gains taxes for your clients. But unfortunately, most investors fail to take advantage of these allowances. So my hope is that by the end of this training, you're going to have a much better insight on exactly how you can help your clients with some of these opportunities. Now, quick background on me. My name is Stefan Bellholm. I'm a tax planner And my office is located in Pinehurst, North Carolina, which is about an hour south of the Raleigh-Durham area. Now, before I got into the tax business, full disclosure, I myself paid a lot in taxes. And my dad's an accountant. So I know from experience that stroking huge checks to Uncle Sam is not fun. And even though my dad's an accountant and I knew a lot about taxes, I didn't know enough. So today I work with a tax and legal team that assists business brokers and real estate brokers and tax firms all over the country with these specialized tax structures for their clients. We don't just sit around all year preparing tax returns. We help people use the legal loopholes in the tax code just like the top 1%, instead of getting robbed by the tax man like most people. So the objective of this training is to go over some of the reasons why most investors overpay by hundreds of thousands of dollars in capital gains taxes and the inaccurate information, or I should say misinformation, that a lot of people have been receiving over the years. We'll talk exactly about how these different structures can help your clients reduce or defer capital gains taxes indefinitely. And then I'll go over how you can partner with our team to help your clients so that they don't have to be killed with taxes and taxes don't have to be an issue when they're selling, and that you can close more deals. Again, that's what this is all about. And then finally, I'll go over how you can get started with us within the next 30 days or less. So who is this training for? This training is for really any brokers or accountants or any type of advisors that have clients that are selling business assets like company stocks, equipment, intangibles, partnership interest. Anyone that has clients selling real estate assets like luxury homes, raw land, commercial property. Maybe you have clients that do fix and flips, or that are real estate developers, or maybe you have folks that are in the middle of a 1031 exchange. We'll talk about that in later on. And this is also for anyone that has clients that are selling investments like highly appreciated stocks, cryptocurrency, precious metals, things like that. Now, the Internal Revenue Code has contained provisions to mitigate capital gains taxes for decades. Okay, this ain't new. This isn't some conspiracy that the government is trying to hide from you. AT&T sold a subsidiary, got $43 billion, and paid zero taxes. See, no gains, no tax on the gains right here. The owner of Patagonia, those expensive puffer jackets and vests, this guy sold his company stock and avoided a $1.6 billion tax bill. And the only thing that separates these guys from your clients is that they have people that know the tax code. Now, I'm not a cheerleader for Elon Musk, but he says, don't confuse schooling with education. I didn't go to Harvard, but the people that work for me did. And that's why Elon Musk makes billions of dollars a year and pays no taxes. He has a team of people that are specialists and that know how to help him legally pay less taxes. But if you think your clients need to be billionaires like Elon Musk, or that these structures are too complex or expensive for your clients, you might be surprised. We recently had a broker from California reach out to us who was concerned about one of her listings that had a significant capital gain. And this girl, she worked her butt off. It took her a long time to get the listing and to even convince the seller to put it on the market. And out of all the different issues that can, come up before closing and screw up the deal, I'm sure you know how that goes. She really didn't want taxes to be one of those things. So the background of this case is that it was a property located in Los Angeles valued at around $30 million. And it was originally purchased in the 1980s for around $200,000. Now, the client did about $2 million worth of improvements to the property over the years, but it's still a significant gain. Now, after closing costs and commission, the client stood to profit about $25.8 million. However, after you factor in depreciation, her net taxable gain was $27.4 million. Now, at 20%, that would only be $5.5 million. But when you add in California state tax, the net investment tax, depreciation recapture, she'd actually have to pay $10,612,018. That's close to 40% in taxes. 40% of her profits were going to taxes. You see, capital gains taxes are just the tip of the iceberg. You have the net investment income tax, also known as Obamacare tax. That's 3.8%. Then there's depreciation recapture tax of up to 25%. And depending on your state, if you live in a state that has state taxes, you can pay up to 13.3%, like in California. Then there's debt over basis or mortgage over basis that a lot of people don't talk about. But if you sell a property or investment that has, a mortgage or debt, and at the time of sale, if that debt is larger than your original cost basis, the IRS can tax you up to 39.6% on that difference. And if part of the sale includes intangibles like goodwill and intellectual property, that can be taxed at much higher ordinary income rates. Right now, up to 37%. Who knows what it will be in the future? So there's a lot more that's beneath the surface. Now, because we had enough time, our team was able to establish a tax structure before closing, and the client was able to avoid that $10 million tax bill. So the client went from a scenario of, listing a property for, $30 million, having a $10.6 million tax bill and only having $17.4 million left over, to being able to walk away with $27.4 million after closing costs, after commissions, and yes, after the cost of setting up the tax structure. And it wasn't complex. Do you think it made sense for the client? Of course it did. And it'll make sense for your clients too, because every dollar they pay in taxes is a dollar they lose forever. They never get that back, which is unfortunate because your clients can avoid that tax bill. Capital gains taxes do not have to be an issue. Now, there's a big difference between tax avoidance and tax evasion, okay? The IRS specifically states that if you underpay taxes, underreport, don't report income, falsify income or deductions, things like that, that's tax evasion. That's illegal. And our tax legal team, obviously, we don't participate in that. But tax avoidance is a different story. It's completely legal. This yellow book here, this is the IRS handbook for special agents. And in section 412, it specifically states that tax avoidance is not a criminal offense. Any attempt to reduce, avoid, minimize, or alleviate taxes by legitimate means is permissible. Not only that, the IRS fully acknowledges that without knowing the rules, individuals will pay more than they need to. That's what it says right here in this IRS document. Many people pay more federal income tax than necessary because they misunderstand tax laws. This is coming straight from the IRS. So the government is basically telling, your clients straight to their face, hey, as long as you play by the rules, you can pay as little taxes as you want. But if you don't know the rules, which we're not going to outright tell you, we can make you pay as much as we want, and there's not a damn thing that you can do about it. That's pretty much what the government is saying. But what bothers me is that even the most savviest investors out there, they don't understand this. And they get taken to the cleaners by the IRS every single time. The point is that when your client creates a capital gain, taxes are owed on that gain, okay? They can't escape that. They can't avoid the tax. But your clients can avoid the taxable event. And I'll be going over more of that in a little bit. Now, traditionally, the most common methods that investors have used to mitigate capital gains is by deferring taxes through some sort of mechanism. Particularly, it's either an installment sale or a 1031 exchange. Now, these aren't bad options, okay? but they're not really tax efficient for your clients. Sure, installment sales methods can help by, spreading out the cap gains tax over the life of the installment note. But an installment sale also has the potential to backfire on the seller. For example, the depreciation recapture must be reported as gain in the year of the sale, no matter how much cash the seller receives. Most people don't know that. And if tax rates increase during the life of the note, the overall tax could wind up being way more than they expect. 1031 exchanges are a great option for clients that want to invest in another real estate investment. But there are a number of states like Pennsylvania, California, Oregon, and South Carolina, for example, that either have withholding requirements, clawback provisions, or don't even recognize 1031 exchanges, which basically means that you might still be taxed on the state level, at least, with a 1031 exchange. And because many sellers are not able to meet the identification and exchange deadlines for 1031, exchange transactions, like-kind exchange transactions, a high percentage of 1031 exchanges fail and become taxable sales. According to the National Association of Realtors, around 88% of exchanges fail. That's a lot. Regardless, with any of these traditional methods, your clients are just postponing the tax for a few years. They're not saving anything. They're just kicking the can down the road, just deferring taxes for a few years. And how smart do you think it is to defer taxes in this current environment? Our country is in massive debt, and our government will not stop spending money. We spent trillions of dollars in stimulus money during the COVID pandemic. So what we're already seeing happening is that taxes are slowly starting to creep up. Most people don't know this, but in 2021, the government collected $500 billion. That's billion with a B in capital gains taxes. That's almost double what they collected the year before. And in 2022, with the passage of the Inflation Reduction Act, the IRS now has billions of dollars at their disposal, and they're training an army of agents to go out there and collect more money. The Biden administration has openly stated they want to increase the capital gains rate, and they want to even tax unrealized gains. It's crazy. Now, all this stuff that you're seeing here is really just a prelude to what the government has in store for people like your clients. Who knows what other plans they have? And I'm pretty sure none of your clients want to find out how Uncle Sam's going to screw them. Because the wealthiest people in the world, the people that are the most tax efficient and that pay the least amount of taxes, guess what? They never leave things to chance. They're always proactive. They're always ahead of the curve and doing things way in advance. So your clients have to start doing the proper planning now, okay? And part of that planning is learning how to use these specialized tax structures. Now, this is not about setting up LLCs in Delaware or Nevada or any other state. And it's surely not something that your clients can just, watch on a YouTube video and then just get instantaneously like that, right? You have to know how to do these things right, how to set these things up properly, how to manage them, how to report them, things like that. Just like a business or any other type of entity, there are tax laws that you have to follow. There are EINs that have to be filed. There are contracts. There are operating agreements. There are bills of sale, all that things. There's a whole bunch of things. But with these specialized tax structures, your clients can significantly reduce or even defer capital gains taxes indefinitely. These structures are purposely set up to minimize or completely avoid taxable events. You see, when your client is the party selling an asset, it's going to hit their personal tax return as a taxable event. But when your client has a specialized structure and that structure sells the asset instead, it doesn't trigger a taxable event on their personal tax return. These structures are completely separate entities that file separate tax returns. They're not flow-throughs like S-corps or LLCs, and they get tax benefits and exemptions that individuals do not get. Now, your client is the fiduciary, okay? So they can make executive decisions, they can access funds, and they have complete control. But they do not have any personal ownership of the assets or the money inside the structure. This is the whole concept of own nothing but control everything. Remember who said that? John D. Rockefeller, right? Standard Oil Trust. If you haven't heard of him, Google him. But the reason why he said that is because that's what wealthy people do. This is why the wealthy pay no taxes. They use these specialized structures, and your clients can do the same thing. Your clients can buy and sell all their businesses, their real estate, their investments within these structures and defer the capital gains taxes or reduce them for decades or even generations in some cases. Not only that, but your clients can invest in other properties and businesses and purchase other assets like vehicles or boats within these tax structures and pay no taxes. Your client will be able to defer cap gains taxes indefinitely, have access and control of their money to invest how and when they want and how they see fit. They don't have to deal with the pressure of property identification or exchange deadlines. They get complete anonymity because these are private transactions and they are not a part of public record. And your client gets ultimate asset protection with these structures. No entity out there will be able to attach a lien or a judgment against the assets in these structures. This is a completely different way of doing things. And if you have clients that are selling businesses or equipment, partnership interests, intangibles, commercial properties, real estate developments, luxury homes, apartments, hotels, crypto, stocks. If you have clients that are doing any of these things, they need to be using these specialized structures. Now, a lot of people ask, and you may very be well thinking the same thing, why haven't I heard of this? Why hasn't my accountant, mentioned this? I'm pretty up on things, right? I read Forbes and Fortune. I have a tax attorney. I get it. But you have to understand the tax code is 17,000 pages and has so many chapters and sections and clauses. Even the sharpest minds don't know 100% of the tax code. These structures are found in specific areas of the Internal Revenue Code, like Section 368, for example. These are typically things that you find with bigger transactions. Again, AT&T, $43 billion transaction. Grubhub, $2 billion transaction. But the tax code does not restrict the use of these structures to billion-dollar transactions. That's the key here. So if your client has a 6 to 8 figure capital gain, they can and should be taking advantage of these things. Now, there are over 50 different structures that can be set up in the United States, from special purpose vehicles to trust, private foundations, risk management companies, settlement funds, and the list goes on and on. Many of them can be set up on the state level, but some can also be set up on the federal level. Regardless, when these things are managed properly and put together the right way, they have provisions that allow your clients to mitigate capital gains taxes and maintain control of their money and assets. So your clients don't lose control of anything, okay? And again, these things are things that the wealthy people have been using for years. John D. Rockefeller, Standard Oil and Trust, okay? Bill Gates, the Bill and Melinda Gates Foundation, the Leona and Harry Helmsley Trust. Remember her? The Queen of Mean. She said, we don't pay taxes. Only the little people pay taxes. And you know why she said that? Again, because wealthy people don't pay taxes. So if your clients are paying more taxes than these billionaires, there's a big problem. There's something missing because this stuff isn't new. This stuff isn't sitting in some secret vault that's just been discovered like the Da Vinci Code, right? And granted, maybe some of your clients are aware of some of these things, right? But they don't know how to actually execute them. And that's the thing. It's one thing to have the information, but it's an entirely different thing to act on that information. I used to watch G.I. Joe when I was a kid. And the thing they said at the end of G.I. Joe is, knowing is half the battle. Now knowing is half the battle. So it's what you do with the information that matters. And wealthy people avoid taxes not just because they know their options, but because they know how to take action. Again, they're always ahead of the game, and they'll hire the right people and do whatever it takes to gain an advantage. Now, granted, most of your clients probably have good accountants, but what they don't have is a team of specialists that can help them with these unique structures to avoid these taxable events. It's like the difference between a general practitioner and a surgeon. They're both doctors, they're both important, but one is an expert in something, unique and specific, got a lot of training, and the other one, it really isn't trained in that field. So it's the same way with us. And that's where our team, our tax and legal team can come into play, because your clients get to work with a group of experts that do this type of work all day, every day, and that only focus on helping investors with these specialized tax structures. So our team, we have a team that is made up of tax strategists, forensic CPAs, enrolled agents, tax attorneys, and bookkeepers that have over 40 years of experience with this stuff, ranging from, contract law to trust law, tax codes, all that stuff. And they've worked with some of the top tax and advisory firms in the country. We've been featured in Fortune magazine, and some of our team members are former law professors and IRS auditors. So our team knows the process. We know all the guidelines, we keep up with the changes, and we make sure that there's proper documentation, certification, and reporting when it comes to these structures. Everything has to be done right. And with us, everything is audit ready and defendable. And that's a huge deal, because the compliance part of this is so important for your clients to be able to sleep well at night and rest assured that they're doing things in line with the tax code, right? No one wants to go to jail here. You don't want to do these things willy-nilly. The IRS does not play games with this stuff, and they will make an example out of you if you screw around even a tiny bit. Okay, so yes, there's a process to this. You have to make sure you're doing things right. But our main focus is to make sure that everything, the whole process is simple and easy for you and your clients. Simple and easy. Because let's face it, at the end of the day, the last thing you or your client needs is another complication before closing, before they sell their investment. So our team is really here to do all the heavy lifting so that you don't have to worry about anything. Our team can work with your client's existing accounting team, okay? We're not here to replace anybody's CPA. Again, they probably have a really good accountant. They're great at their job, but we're also great at our job. This is a team-based approach, and that's one of the reasons why we partner with tax firms all over the country. Capital gains taxes are the number one profit killer. It kills your client's bottom line, and it kills your deals. Don't forget, capital gains and recapture taxes are due the quarter following the sale of that asset. So your clients don't have a lot of time. They got to cut that check pretty much right after they sell their asset. But the good news is that capital gains taxes do not have to be an issue for your clients. And you need to be the one to let them know that they have options beyond the traditional ways of doing things. Okay? Yes, they can do a 1031 exchange. They can do a Delaware statutory trust. They can do a TIC cash out or a triple net lease. But with any of those options, your clients are really just kicking the can down the road. And ultimately, they may be paying more taxes, than they think. So this is really, really important. We had an accountant from Florida reach out to us regarding a client who was selling a dental practice for right under $8 million. And this was a very successful guy. He had 2 offices and he was basically moving on to retire. Now, the buyer happened to be another dentist that had been working in the practice for a number of years. So he knew the business pretty much inside and out. So it was going to be a pretty smooth transition of ownership. But like most businesses, this was a bootstrapped endeavor, right? This guy pretty much built everything up from nothing. So besides the equipment, there really was no basis. So he was looking at a very, very, very huge gain. Now, the way the sale was going to be structured was that the buyer was coming in with about $3 million down from the bank, and the rest, he was going to be doing the rest of the $5 million through a 10-year basically installment note held by the seller. Now, additionally, the seller, the other dentist, was going to stay on staff as a consultant for about $175,000 a year. So this guy was looking at some serious taxes with all these different streams of income. Now, there was no real estate being sold in this transaction, so 1031 exchanges were off the table. So the only options for the client were to either chuck it up and pay the tax, or, maybe undervalue the business, meaning the client would have to take a huge haircut on the final proceeds. And none of those were attractive options to the client, which is why the accountant reached out to us in the first place. So our team basically designed a structure where the client was able to transfer the business into that structure before closing, and then have that structure sell the business, thereby avoiding the capital gains tax entirely. Pretty cool. We were also able to assign the note and avoid taxes on the gain and the interest income of the $5 million installment note. And because we were also able to restructure the consulting agreement they put together, the client is only going to pay taxes on about 20% of that $175,000 a year consulting income. So obviously the client was happy, the CPA was really happy, and we've had a good relationship with that firm ever since. So I know that this was a lot of information, but hopefully by now you have a better understanding of the possibilities out there for your clients to avoid getting killed with taxes. But how are you going to help your clients with this information? Look, at the end of the day, you only have 2 options. You can continue to do things the old-fashioned way and use the traditional, methods, 1031 exchanges, installment sales, things like that, and hope they work for your clients. Or worse, don't do anything and lose a deal because your client doesn't want to get killed in taxes. Or the other option is you can close more deals and get more referrals and be a hero to your clients by connecting them with an experienced tax and legal team that can help them keep more of their money. That's what this is about. You being the hero and your client keeping more of their money and you closing the deal. So if you feel like any of your clients could benefit from working with the team to help them with these specialized structures, and if you're interested in seeing what it would be like to work with us, then what you want to do is go ahead and take the next step and schedule a free discovery call to see how you can be part of our strategic partnership program. Now, there are a couple of things I want to let you know before you book the call. Number 1, we are very busy, okay? Besides the tax work that we do, we get a lot of requests from brokers and accountants all over the country, but we can only take a handful of calls per day, and we do those on a first come, first served basis. So book your call as soon as possible so you can secure a time slot in our calendar right away. Secondly, this is not for everyone, and we cannot help everybody. Your clients must have a significant capital gains for this to make sense. They have to have a significant capital gain. Otherwise, it doesn't make sense. If you don't have clients that have, 6 to 8 figure capital gains, we probably can't help you because it really just doesn't make sense otherwise. $100,000 gain probably doesn't make sense. $1 million gain makes all the sense in the world, okay? This is also not for people that are closed-minded and that are not open to second opinions. You know your clients better than we do. If your clients are jerks or they're arrogant and, they think they know everything, don't even bother. We want to work with people that are open-minded, that are teachable, and that aren't ashamed to admit that they don't know what they don't know. And if taxes are an issue, obviously we want to help them, but if they have crazy ideas in their heads, it's just not going to work. And we are not transactional. Our team is looking to partner and have long-term relationships with brokers and accountants that are consistently engaging with clients. And the reason why that is we want to help build value and grow your business through our strategic partnership. So everybody's happy. So with that being said, the first step is to click the link below, and then you'll be taken to a calendar that looks like this to book your call. Now, these calls are video meetings conducted virtually. These are not phone calls. Now, you do not have to show your face, but you do need to see our face, one of our team members, and see our screen. So if you're not comfortable with virtual meetings, I understand, but please do not book the call if you're not comfortable with virtual meetings. Now, after you book your call, you'll complete an application that looks just like this so that me and my team can review just to make 100% sure that we can help you and that we're the right fit for what you're looking for and that you're the right fit for what we do. That way we can dive right into everything on the call, and it just makes for a more productive call. Now, during that call, we're really just going to be evaluating and analyzing your current client base, which structures might work best for some of the current cases that you're working on, and the exact next steps that you need to start helping your clients implement these structures so that you can start closing more deals as soon as possible. Now, the sad truth is that there are a lot of people we just can't help. And if that's the case with you, we'll be 100% upfront and let you know right away. Knowing that we're a good match is super critical because at the end of the day, results are the only thing that matter. Okay? That's the only thing that matters to us. And we're really only looking to work with people that are a good match and that we're absolutely sure that we can get results for and get those results as fast as possible. So at the end of the call, one of two things are going to happen. You'll either be a fit, and we'll talk about the next steps, or it's not a good fit, it's not a good match, and that's totally okay too. There'll be no hard feelings whatsoever. Either way, it's going to be an extremely valuable call, and you're going to walk away with newfound clarity of exactly how to help your clients become more tax efficient and take advantage of these unique structures. So go ahead and click the link below to get started, and we'll see you on the other side.